Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, life insurance policies provide a lump sum payment at the time of maturity or in the event of the untimely death of the policyholder, an important financial umbrella for the family. But to ensure that your loved ones get the money you intend to leave behind for them without any hassle, you must nominate your family or legal heir to receive the proceeds from the life insurance policy. Now, a lot of us overlook nomination details in insurance policies as just another formality. But let me stress that in this section is extremely important and should not be omitted. To help us understand the concept and processes of nomination, we have with us Yashish Daya, CEO and founder of Policy Bazaar. Welcome to the show, Yashish. Why is putting the nominee so important in a life insurance policy or any policy for that matter?
In case the policy holder expires and is not there any longer, then the proceeds will be given to the nominee or whoever is named in the nomination. And hence, the sum assured, the large sum of money for which you're buying this policy will eventually go to the nominee. And hence, you have to be very careful about who you are nominating there. And insurance companies also look at this very carefully because that's the person the money is going to go to. So it's very simple.
Right. And now, what are the provisions as far as the law which is concerned? Does it say that you have to, and who all can be nominated in this entire process?
One can nominate anyone at all. One can have multiple nominees. One can have single nominees. You can nominate as many people as you wish and give them a certain percentage share of. One has to understand, nomination only comes into effect if the person is no longer there. If the person survives the policy, the amount comes back to the person.
Right.
If the person does not survive the policy, an unfortunate event happens, in that situation, the nominee gets the money. And whoever one mentions in the nomination get the money. Ideally, they would be blood relatives. However, there are provisions in law for a nominee to also be a friend or a business partner. But insurance companies are quite keen to see some form of relationship because otherwise you create conflicts of interest. Imagine if somebody had a 5 crore insurance policy and they had a totally unrelated person as a nominee. Now that person suddenly has an interest in them disappearing because they will get 5 crore rupees and that person disappears. So those kind of policies are seen with a lot of suspicion. But yes, technically you can have anybody as a nominee.
What about change of nominees during the lifetime of a person? Can that happen? And how?
There are two. So the person who is the holder of the policy can change the nominee as many times as they wish to, as often as they wish to. And the last change that is made is the final nominee. So if you've changed 10 times and the 10th time when you've changed it, you've set a certain number of people or an individual as a nominee, that person is the nominee. The nominee has no right to object, no right to question, because the policy belongs to the policy holder and the policy holder can change it anytime. There are usually, when a nominee change happens, it's because the nominee might have expired or the nominee might not be there because there's no guarantee the nominee is going to survive the policy. And in those situations, it becomes a must. But otherwise, too, nominees can be changed anytime, just like a will can be written anytime.
Right. And what about, of course, we've been stressing that, look, you should put down a nominee. Suppose one hasn't put down a nominee. Then what happens to the claims? Is it a very laborious process? Do you have to approach the court? How does one go about it?
Technically, you cannot buy an insurance policy, a life insurance policy, without putting down a nominee. So
that's incumbent upon the company to do that.
The policy will not be issued without a nominee's name. So it just cannot happen. If you have not put a nominee, I'm very worried at who is the nominee in your policy, because if you've not put the nominee, then somebody else has put that nominee. That somebody else might be your agent, that somebody else might be anybody. So please be aware of who your nominee is. An insurance company will not issue a policy, a life insurance. What's the point of a life insurance policy if it has no nominee? What will they do with that money? Technically, it will go to the legal heirs.
So that's the blood.
Yeah,
the family.
They have the class 1 blood relatives, which is the children and spouse, and then they have other relatives which can also come in because of law. If somebody has a legal will out there. Now the other thing to note is a will can always outdo a nomination. So suppose an individual has taken an insurance policy and they have made one particular individual, the nominee, and it's a large sum of money, and let's say that 1 crore rupees, and let's say the 1 crore rupees comes in, and now there is a nominee, he gets the 1 crore rupees, he or she gets the 1 crore rupees. But there is another set of legal heirs, and the legal heirs say, not fair, we want our share in this. The legal heirs will get their share in it. So the legal heirs have the right to go to court and challenge the nomination, and so the legal heirs always supersede the nomination. However, nominee is the person that the insurance company will pay. Unless a stay order from a court comes that says, from the, initiated by the legal heirs, that tells the insurance company you cannot pay till the legal heirs have settled the dispute.
So what happens if there's a loan outstanding on the person who's passed away, or the person went through a divorce sometime back? Okay. What happens in such a case?
So in those situations, what one is talking about is a procedure called assignment. So if one has a loan and one has assigned the policy to a bank, let's say, or to his business partner, or to anybody.
So there's that difference between nomination and assignment.
Oh, yeah, they're totally different. They're totally different, and assignment itself is a very important.
That to us.
So any life insurance policy can also be assigned, because it's like a property. Just like you can sell your house, you can sell your farmland, you can sell anything. Similarly, one can sell an insurance policy, and assignment is like a sale. So you've assigned it to somebody else. Now, in the case of an assignment, the benefits of that policy belong to that individual. In case the loan is not paid, the loan agreement will have a mechanism that the policy gets assigned to the bank. And if it gets assigned, it's owned by them. The nominee has no status then. The person who the policy is assigned to can change the nominee anytime. More importantly, once you have an assignment, or once you put an assignee on a policy, the policy holder does not have the right to change the assignee without an approval from the assignee. So you have to get a written approval from the assignee to change, because assignee is like having sold the policy. Nominee is like you nominate somebody that, okay, in case the individual is not there, then the nominee gets the money. So they're very different concepts. A nominee can be changed as often as required. An assignee cannot be changed without permission. An assignee is like a sale of a policy. The rights of the policy belong to the assignee. Rights of a policy do not belong to the nominee. Even if they are legal heirs and the policy has been assigned to somebody else, the assignment will supersede or overrule the legal heirs. But the legal heirs can overrule a nominee. So that's the basic process.
And what about in case of a minor? So if the nominee is a minor,
yeah.
And what would you recommend? Is that the right step for, say, the parents to do, to put it in the name for minor child?
Unless you have only one child and no spouse, and you want all the funds to only go to the child, unless that is the situation, it wouldn't make sense. But that's, every individual has to think for themselves. However, in case you do have a minor, you would have to appoint somebody called the appointee. So every minor nominee must have an appointee. And minor, the definition is below 18. So if the nominee is below 18, they will have an appointee. In case an unfortunate event happens while the nominee continues to be a minor, then the funds will actually be kept for the nominee by the appointee. However, in case during the process of this policy, one may have taken the policy when the child is 14 years old, the unfortunate event might happen when the child is 19. Then it's no longer a child, it's an adult, and the appointee is then meaningless, then the nominee would get the funds directly.
Now, what are some of the mistakes that people end up making as far as the nomination is concerned, or the...
See, the very serious...
Which are some of the mistakes that you have seen people make?
People have not thought about who the nominee is. They've just put one person as the nominee. They haven't really thought about, they've not linked it to their will. The nominee is usually not taken very seriously, because one is not thinking of insurance investment as a life insurance concept. See, we sell about 3 crore policies are sold in this country every year. 1.8 crores get cancelled every year. So people are not taking insurance seriously. But more importantly, the nominee is also not taken very seriously. People fill it up. Sometimes the agent is the one who prompts, who should I put as a nominee? And I don't have the stats, but 9 out of 10 policies I see, there is only one nominee, which automatically tells me, see, legal heirs, how often does one have a situation where there's only one legal heir? Usually there are multiple legal heirs. So the fact that most policies have one nominee implies it's not been thought through very well, unless multiple policies have been bought for everyone.
Questions. We've got Jay from New Delhi. He says, I want to know if it is compulsory to take an insurance policy from the same bank from where you are applying for a home loan.
It is certainly not compulsory. So if one is taking a home loan and the bank is insisting that one has a life cover or a home owner's cover, one can take a life cover from any company and provide it to the bank. However, the particular DSA or the particular distributor might not be very happy about it and might make your life a bit more difficult. But legally, there is no requirement that you have to have it from the same bank. In fact, no bank has its own insurance policy. The insurance policy is actually provided by an insurance company. So there is no bank which is also an insurance company. So whether it's an ICICI or an HDFC or an SBI, the banks are not the insurance company.
So you're pretty much free to choose.
You are free to choose whichever one you wish to.
Right. Okay, we've got Sanjeev Jain from Rajasthan. He says, my father is 71 years old. He has no critical illness. Is it possible to take a Mediclaim policy, a health insurance for him? Or would it be better to get a plan for the entire family?
No, at the age of 71, clearly he should have an individual health insurance cover. And if he can still get a critical illness cover, that would be fantastic. There are lots of plans which do not really have a maximum age until which people can get the cover. So whether one is looking at Religare, whether one is looking at Cigna, Apollo, Max Bupa, a lot of these companies actually do not have a maximum age or maximum entry age. And you could certainly get a policy at 71 as long as the individual is healthy. In case the individual already has certain health issues, then they may have to go in for a senior citizen plan, which may have a certain amount of co-investment coming into it or co-payment coming into it. Critical illness, again, it will be difficult to get it at that age, but if they are absolutely fit, I see no reason why they, a company would not consider providing them critical illness. But 71, etc. are ages at which, at some point, like, I talk about my own grandfather, he's 93, 94, whatever. But at some age, he's fit. He's been fit all along. But at some age, these things do start to hit in. Now he started having heart issues. So at some age, critical illnesses do come in, and insurance companies do not want to cover you when they start becoming an almost certainty. So at an older age, it becomes very, very difficult. Critical illness, etc. You must try to take them before 45. But simple answer: take a single insurance cover, not a family insurance cover. Everybody else's premium will go up otherwise.
Right, we've got Parush from Nainital, and he says, I have a postal life insurance Suvidha policy. Should I keep it or buy one from a private insurance company?
So postal life insurance company, some of the policies are specifically available to government employees, and if you qualify for it, stay with it. However, if you are looking at a long-term investment, because this is a standard endowment sort of plan with slightly better returns than a normal endowment plan. But if one is looking for long-term returns, I would strongly suggest, if you're below 40, that you must look at an option of a low-cost ULIP. And if you are above 40, then PPFs, National Savings Certificate, some of these plans actually work much better. You also had postal deposit. I don't know whether they're there these days, but those plans do tend to give you 8.5% return and tax-free as well. So they do tend to work better over a short period. And if you have a long period in time, and if you are less than 40, then go for the low-cost ULIP.
Right. Aman writes from Noida, and he asks, does a medical insurance policy cover eye surgeries? I have a policy from Chola Mandalam for 5 lakhs, which I started last year. Kindly advise.
So after a certain waiting period, which is usually about 2 years, cataract does get covered. So unless it's laser surgery, etc. So depends on what the eye surgery is about. If it's cosmetic in nature or if it's a high-end surgery, it would not be covered. However, it's basic cataract operation that will certainly be covered. But after a certain waiting period, which is I think 2 years or so in most policies.
Thanks, Yashish. Now that's all the time that we have on this show. Thanks for watching. But do write to us at ask.policybazaar.com or tweet us at policybazaar_in. And we'll see you next time. Goodbye.